Boom. What up, y'all? It's your man, AbuAmerican. I am here with my man, Dimitri. What's up, bro?
What's up? What are you all doing?
Hopefully well. This is the first episode of Blockchain Bros. I was actually looking and I was thinking about changing the name, to be honest, because I don't know. I have to take a look at it. I want to talk to you on the side. I was looking at like Alpha Geek or Alpha Nerd or something, man. I kind of like that for some reason. Blockchain Bros is pretty cool too, though. But
It's got a certain ring to it.
it
BB,
really
Blockchain
does.
Bros. Yeah.
Yeah. It really does. But yeah, like the name implies, this is everything blockchain. Everybody always like conflates. It's not a conflation, but they always like throw together the two, blockchain and Bitcoin. But really, Bitcoin is more than just Bitcoin. There's an entire technology behind it that a lot of people don't understand why it is what it is and what makes it popular and what makes it so powerful and what makes it so like in demand these days and absolutely necessary. So what we want to do is we want to start from like the basics up to beyond on
hmm
Bitcoin, blockchain, all that stuff that makes it all together. And my man Dimitri here, he has. I'm a miner, so I come from a different angle, but he has more specialized information and knowledge than I do, and so I'm quite happy to have you here as a co-host on the show. Good sir, thank you.
You're welcome. I like to educate people on such issues. Certainly, with the high Bitcoin value going on at the moment, I see a lot of investors, a lot of traders going about, but have virtually no knowledge about the technology behind, making absurd and mad claims. And I'm like, yeah, guys, if you want to be a good investor, good trader, and you want to make decent profits on the long run, you better learn how this thing works because otherwise you're going to cut
Yeah,
yourself short. Period.
absolutely, I agree 100%. I don't know. Do you work in the field of cryptocurrency or?
Not at all. I'm actually a project engineer and product manager for Wiesmann in heating, ventilation, and air conditioning. I'm an engineer in reality. So
Okay.
almost nothing to do with cryptocurrency. But
Yeah.
during my studies, I have quite a few friends who were into ICT, etc. We were at kot, like they say in English. So did quite a lot of stuff with these guys in Erasmus Brussels, where I went to university.
Hmm.
Well, we implemented the first idea of hackathon because, how to say, the administrators of the building where we were in challenged us and said, "Yeah, we've got new firewalls, updated security, etc. You cannot break in." I was the very first with free software to break through, simply to be able to play World of Warcraft. So yeah, so they were quite pissed off and at the same time impressed. So yeah,
Yeah.
since then each year they asked, all ICT guys, all guys who were a bit like me, who were engineers, etc. Well, we
Yeah.
implemented some new security. We want you guys to test, etc. And with that, I developed an interest into internet programming, etc. And it's only in the last couple of years, um, when I started living alone before I rent an apartment with my friend, that funds to me became a little bit difficult, I'm going to say, and started to search for means for investments, etc. And I ended up with cryptocurrency, and
Okay.
quite early, immediately saw the potential it had. So yeah, that's how I kind of rolled in cryptocurrency, and then I noticed many people not really understanding the technology behind, or it relates to traditional currencies, etc. And with that in mind, especially since this year that I actually started out writing my own courses, my own material that people can read and start learning to understand blockchain, cryptocurrency, and at the same time get some decent tips on what to watch out for, how best to trade, etc., etc. So yeah, it's
Right.
still a work in progress, but I'm more interested in letting people learn about cryptocurrencies, etc. So yeah.
Nice, nice, yeah, yeah. That is interesting. Also, that I remember you do have like quite not quite a few, but I remember you had like some information out there on cryptocurrency and whatnot. But actually, let's just get right into it. We'll come to that. We'll come back to that. Let's get right into it. Oh, we got it. What's this? We got a question already. Do we want to address questions now, or do we want to just go into our material and do questions later? It's a pretty good question, actually.
Yeah, if it's a good question, shoot.
He said, let me wait, because I'm doing this from the phone for the first time, so let me see if I can put this up on the screen. Oh, nice, I can. That's pretty good. So thanks for this, gents. What did the founder of BTC, his name is Satoshi, nobody knows who he is, he's still an anonymous person, do to create BTC, and how did the original BTC get into the public's hands?
That's actually a very good question, and I will be referring to the history of Bitcoin itself. Well, most people think Bitcoin is actually the very first cryptocurrency ever developed. That's not true. The very first cryptocurrency to ever be developed is called e-gold, and it has been developed somewhere in the 90s or 80s somewhere. Well, actually, the history of cryptocurrency and Bitcoin starts much, much earlier, even in the years the 70s and the 80s, with the very first personal home computers being used. Why? Well, the classic markets for currency like the dollar, a euro, has inherent flaws. This was very early realized. And since the 70s and 80s, with the development of personal home computers, people were actively seeking out means to digitize and secure currencies, that they were no longer bound to governments and, well, central authorities like banks, etc.
Yes.
It has been, how to say, Tardius, I believe is the correct English word. Yeah, sorry, I'm normally Dutch, so I'm making all translations directly here.
No problem.
And certain ones I only know in French. But yeah. So yeah, where was I with the history? So yeah, e-gold was the first currency there. And well, there has been multiple attempts in order to develop a safe currency, which, well, was digital, secured, and not really in the hands of central authority. Now, the problems encountered during those decades leading up to Bitcoin, well, was plain and simple human greed, I'm going to say. The very first currencies, which were all developed like e-golds, well, was still centralized. With that, it means, well, there was a distribution towards everyone. There was an attempt. Sadly enough, the developers and the companies behind it, well, kept their hands in. They could invalidate certain transactions, etc. And it was only when Bitcoin was launched with the group or person Satoshi Nakamoto, which launched Bitcoin, that actually the very first secured cryptocurrency with all the necessary, well, technology could be launched. So it's actually a very long project that has been running, and with the launch of cryptocurrency, well, the first digital replacement, the very first currency was launched that was not in the hands of a central government. So yeah, that's a bit the history behind Bitcoin. So it actually stems from an idea from a group of people, actually multiple people, who are seeking for a means to take out the power from government and authority away, but at the same time create a stable currency that could be used by everyone. So yes, I hope that answers the question a little bit. So it's yeah, quite a long project.
How did he? One part that is kind of missing is how did it end up in the public's hands? I mean, what was did he follow a particular strategy? This is something actually I don't know how he managed to put it into the hands of the public.
That was actually the agreement with the developer or developers of Bitcoin. Upon launch, well, they mined the coin themselves, so they wrote down the code, the entire blockchain, everything what will happen. So the halving events, the halving events after every 210,000 coin, etc. Hard coded it, and then the group as a whole or the developer itself said, okay, I'm going to launch it that date, hands off, and we'll let it run its course. Now, naturally, there weren't as many people, well, to distribute Bitcoin, so there were quite a few wallets, and one of these wallets still is being considered to be in custody of Satoshi Nakamoto, one of the developers self, which has a few thousands or millions of Bitcoin still stuck in it, never been touched. but the very first developers, well, tried to implement it locally with local businesses to pay Bitcoin for certain services. The most renowned one, well, is when they first bought a pizza with it, with one of their local pizzerias. So yeah, that was one of the very first official transactions which distributed, I believe. They paid quite a lot of Bitcoin for it, and if you would calculate it now, that pizzeria would be worth millions or literal billions at the moment.
There were actually, I just saw like an article, I think it was last month. They think Satoshi is out there still making moves because they called me like Satoshi era Bitcoin. There was just a movement on the blockchain of like a huge amount of Satoshi era Bitcoins that have just haven't moved since the creation of Bitcoin, and they recently moved because people who don't know, the blockchain is basically a ledger, and anytime there's a transaction on the ledger, like say I transfer money Bitcoin to Dimitri, that's registered on the ledger. And so anytime a movement takes place, anybody can technically see it. And someone actually noticed that like a huge amount of Satoshi era Bitcoin was moved recently, has been never moved since the creation of Bitcoin. That's why they call it the Satoshi era, because there has been some changes to the coding since then. When it comes down to mining, just as a side note, since I'm a miner, I can talk about this. When Bitcoin first came out, you could mine that stuff with your CPU. I mean, it was literally mining with a CPU. It's unbelievable, the concept of mining Bitcoin with a CPU in this day.
Oh yeah.
Yeah. Nowadays we have entire farms with like not tens, but maybe thousands of like ASICs, application specific integrated, circuitry machines that are specific to mining Bitcoin. I mean, it takes thousands of these things and a ton of power to actually I think they said right now the cost of mining one Bitcoin is something like $15,000. That's how much
easily.
Yeah. So you can imagine going from CPU to this. It's crazy. Yeah.
Yeah, it's actually one of the disadvantages. Well, not really. Well, people would consider it a disadvantage. I, on the other hand, see it as one of its fortes, one of its strengths, and that's one of the strengths of proof of work. I'm going to remove the cat here. Stay down. Sorry. One of the strengths of Bitcoin, and that is with the proof of work, you've got an increase of hashing power, so of security of the coin. There's practically no limit on it, which is actually quite good. Some would see it as a disadvantage and say, yeah, but that means mining becomes more costly. Not necessarily so, because it will organically level itself out starting from a certain point in time. Also, you mentioned mining with a CPU. Well, naturally, for big coins like Litecoin, Ethereum, and Bitcoin, that's no longer possible or feasible. It's simply an impossibility. Yeah. Now, luckily, there exists other coins with which you can actually mine with a CPU. Yes, CPU. Now, lately, I've done a review of another coin of the P network. That's a special coin still in development. It's going to be launched somewhere next year on the official market. Still mining it, but it's being done on my smartphone.
Okay, nice.
Yeah, it's a project from Stanford University.
I think one of the most popular coins that you can still mine with a CPU is Monero. I think that's still mineable with a CPU. I think it's called XMR. Yeah, XMR, right?
Monero, yeah, that's correct. I for some time mined some Monero. Well, actually, I helped sustaining a bit the network in order to analyze the coin itself before I made an entry on my website. So yeah.
Yeah. So people, they're wondering blockchain, Bitcoin, what's the connection? What's this? And I touched on it briefly. Can you give people like a brief rundown of the ledger, the blockchain ledger, how that operates, how that functions on a very rudimentary level? Obviously, it's not going to be super interesting to everybody, but just so they have an idea and understand what makes it so secure by way of the ledger and blockchain.
Well, to start off with Bitcoin and blockchain, it must be understood Bitcoin is actually a side effect or an extra you get from mining the blockchain. What is the blockchain? Well, it's actually nothing more than information securely stored somewhere on the internet in a distributed network. Now, what also should be understood is that the blockchain actually has two meanings depending on the context. You've got blockchain as public ledger, so all the transactions being stored online in the cloud. And it can refer to the technology, blockchain technology, which is the process of encryption, decryption of information, which pertains to mining, which you know everything about.
Indeed. Yeah, I
So
can talk
that's
about it. Yeah.
so yeah, that's a very small rundown of what a blockchain actually is. It's nothing more than a string of secured information. Mining, when well attached to it, is nothing more than decrypting the information and storing transactions on the blockchain. So movements of, well, cryptocurrency like Bitcoin or Ethereum or Litecoin or whatever.
Yeah. In terms of mining, where miners fit in with blockchain, like you said, okay, so guys, I'm going to try and explain as best I can. If I get it wrong, then Dimitri can correct me. So basically what happens is like this. Let's say, again, we use Dimitri and I as an example. I send Dimitri some Bitcoin, and this transaction goes on the blockchain being a ledger of like transactions that take place. You know, this amount went from this person, this, that, the other, and it's confirmed from several different nodes. So within that, where I fit in or where the miners fit in is now this transaction goes into, let's call it a pool, for lack of a better term. And then that's just taken and it's, like you said, decrypted by a miner. And for doing the work, this is what proof of work comes from. It's decrypted. And when he decrypts it, he is paid for the work of decrypting that. And then, so I'm not sure what the block reward is. That will be considered a block. Your transaction, let's call it a block. I'm just being very rudimentary here, guys. But your transaction is a block. And when a miner decrypts that block, he gets a block reward. That block reward is, I don't know what the block reward is for Bitcoin right now, but like every
6.25.
Oh, damn, that's nice. Wow.
Yeah, but considering the high hashing power needed,
Yeah.
the only ones who can successfully mine are mining pools. So the reward is automatically distributed towards all miners involved in a mining pool.
Yeah.
And depending on the mining pool you're joining, it might be the case certain fees are being deducted, like use of the servers.
Yeah.
And that mining pool itself might take into account how many hours you were active or what the hash rate is you added towards the mining pool.
Indeed.
And calculate your reward from it. So yeah, that's one of my advices. Yeah.
I mine Ethereum, and Ethereum, I had a point here and I lost it. Whatever the case may be, it's the same thing in Ethereum. It's the same concept between all cryptocurrencies. There's a difference. There's two different methods. It's called proof of work and proof of stake. Proof of stake, I have to be honest, I don't truly understand proof of stake. Maybe you could touch on that. I mean, because I truly don't understand it myself entirely.
Well, proof of stake is a bit alike proof of work. Now, the sole difference is that you're going to add a certain kind of layer towards the encryption, decryption. Mainly a certain point of authority, which is the staking part. So in order to successfully mine, they will ask you to stake a certain amount of coins, certain amount of Ethereum. And that's one of the discussions we had in the men's community there. In order for the proof of stake to work for Ethereum, you need to stake 32 Ethereum, which is quite a lot. And well, during one of those discussions, we said, well, that makes the future for Ethereum a bit, well, up or down. It depends on how the market reacts, and all will depend on, well, how the movements will occur. Now, I think Ethereum 2.0, so the new version, will be kind of successful, but I keep a close eye on the market to see what will happen. In any case, I dare say Ethereum Classic, which will continue using proof of work, is a more fair bet on that account.
Yeah, I used to mine Ethereum Classic. I switched to Ethereum. I was of the opinion, and I'm going to say I admit that my theory is probably wrong. I had the hypothesis, and actually, there's no guarantee that I'm wrong, that Ethereum was gonna take a hit. But now looking at the way it's skyrocketing, I can see more and more people. I can imagine at the current rate and the way that things are like just flying to the moon, that a lot more people will be willing to stake. But if Ethereum goes up to $1,000, and then you're talking about 32 Ethereum to stake, I mean, that's That's $32,000 to become a node. And then with the slashings and all that stuff, we're going to deep stuff that like the new people actually don't know. Maybe we should say that for another show. I got a question right
Yeah.
here. Why would the Federal Reserve and Western governments let Bitcoin succeed? Won't they ban it if they see it as a threat?
Well, quite an easy answer. Federal Reserve and Western governments see the potential in cryptocurrencies like Bitcoin. They see it has great value, and they, well, are a bit like us, like you, me, well, Craig here. They know that its value will increase. They know it will play an important role. They know it's a multi-trillion market in full development. So it would be very unwise to start, well, banning the use of cryptocurrencies. I know some countries do so, but on the back hand, those same countries, their governments and banks, are secretly, well, pulling in Bitcoin for collateral or as a backup asset should their economy crash entirely. Especially now with the current pandemic, well, more and more countries and governments are actually starting regulations and trying to get their hands, well, into the crypto markets. This week, or was it last week? I can't really remember. I made a little Twitter tweet concerning recent U.S. regulations from the U.S. Treasury, where the U.S. government is trying to regulate, well, cryptocurrencies. They wanted to start it with Bitcoin, and immediately the CEOs of Binance, Kraken, Coinbase jumped onto it and said, "Yeah, well, you guys are trying to regulate it." And with regulation, well, the exact point was currently the biggest entry point for any investor, any trader who want to earn or have Bitcoin, well, it's through an exchange to buy it. Now, on an exchange, you aren't really anonymous. Why? Upon logging in or making an account, well, they will ask for your identity. That's also the sole entry point for governments and banks to know how much crypto you have. The US Treasury rules said, well, okay, we're not going to interfere with the exchanges themselves, but we are going to demand them that if the transfer towards a private wallet is being done, that the exchanges themselves ask for the identity of the owner of that private wallet. Yeah, that's the regulation they try to push through.
That's madness.
It's madness, and in a certain sense, well, a little bit devious. Why? Many people keep their coins either on an exchange or immediately transfer towards the private wallet. Government wants taxes because, well, most of them are in debt, so they are actively seeking means to get more money into their pockets. They know about cryptocurrency, and they do not know, well, most IDs of the people who own cryptocurrency. By implementing that rule, almost, I dare say, more than 60% the private wallet owners will suddenly be known towards the government, and they can start leveraging. And they can start leveraging taxes. Why? As soon as a private wallet has an identity attached to it, you can, because we're speaking about the public ledger here, about when talking about Ethereum and Bitcoin.
Indeed.
It implies you can trace the transactions made towards that private address. And in the tweet I made last week, I try to explain this and say, well, now is one of the best times because it hasn't been implemented yet, and there's some controversy that, well, the exchanges are pushing back against the regulations to immediately start your own private wallet and immediately send through your funds. I know there are transaction fees, etc., attached to it, but believe me, those few tens of a cents will not weigh up to the taxes you might possibly evade on the long term.
Indeed.
So yeah, that's quite an important aspect and development which is being pushed through, and that not many current investors and traders know about. Because
Strive. More times than not, we've seen that many governments around the world is also they've tried to like interfere and intervene in the progress of Bitcoin, and all that it's happened is it's just gone underground. It's literally almost impossible to regulate, which is one of the problems. If you have a connection to the internet, it's possible to get Bitcoin. So I mean, it's really hard for them to get in the way of it. what's going to happen is it'll just be driven underground. That's all that will really happen, which will probably make it even more popular. So, I mean, it's not like governments like have a love affair or like, they're just sitting by idly, like Dimitri explained. They've tried to take action. It's going to be very difficult to push it. On the note of like anonymity, most people are confused with the idea that there's like entire and complete anonymity in terms of blockchain, and that's partially true, but mostly untrue. There's only two ways you can be completely anonymous in terms of cryptocurrencies. There is one technology, XMR, that is known for its absolute privacy, and XMR is really underrated. The technology behind XMR and what they're doing is amazing, but it's for some reason it doesn't have a whole lot of popularity. But anyway, let me get into what I'm about to talk about. Two ways you can be completely anonymous with cryptocurrency. One, you purchase it from somebody cash in hand, and they literally give you the money or they transfer it to a wallet that you have. So that means you have to be face to face, or like I know Dimitri and he trusts me and I trust him. We transfer money between ourselves either per hand or online without any real connection or understanding for anybody. Like if I PayPal'd him $100 and he sent me $100 worth of cryptocurrency, then that's a completely anonymous transaction. I am now anonymously in cryptocurrency. Or two, you become a miner. When you buy a mining machine, there's nothing to connect you between the miner. So nothing says this miner is owned by Dimitri. This miner is, owned by Abdurrahman. And so when that money comes to my wallet, I am completely anonymous. Otherwise, as a common person, you do have to go to an exchange, transfer fiat money to them in exchange for cryptocurrency, and these exchanges always require identification. And so the idea that you're completely anonymous with cryptocurrency is really, it's partially true and it's not entirely true. So just to go, into that little aspect right there.
Yeah, general rule to remain anonymous with cryptocurrency: simply do not pass through an exchange. That's golden rule right there. Now, if you want it easy, and that's also one of the important aspects for those who follow me, I've been not going to say harping, but putting into the spotlight DeFi, decentralized finance. There's a lot of movement on that account. It actually implies making the exchanges decentralized, that you no longer need to pass through a traditional exchange like Coinbase or Binance, which asks your ID. No, decentralized exchanges pertain to, well, DeFi or decentralized finance. They offer the same services as a classic exchange, but you no longer need to give your ID away. You simply need to log in with your wallet or take a wallet from them. Doesn't matter. You own the private keys and you can make the transactions entirely anonymous on that platform. And governments, that's also one of the things they try to regulate with decentralized exchanges, and said, yeah, but you need to know who the holder of the private wallet is. And those decentralized exchanges say, that's true, but we're not going to comply. By reason, we are on the blockchain, we are decentralized. There is no frigging law that can stop us. By reason, we are delocalized. We are not on US soil, we are not in Europe soil, we are not on Asian soil. We are entirely virtual. So they can do nothing about it. So that's the second option you will be having.
Yeah. Cyber attacks. Harry McGuire, I'm going to let Dimitri answer this, but I do want to say something about this. Cyber attacks are real. They still happen on blockchain. Ethereum Classic is a classic example of cyber attacks against an entire coin or an entire, blockchain cryptocurrency. And in terms of like exchanges, don't keep your money on exchange. If you get cryptocurrency, I'm calling it money because I use it as a measure of currency, of value in terms of currency. Don't keep your cryptocurrency on an exchange. Get a cold wallet, or have a wallet on your PC and pull that stuff off the exchange immediately. And cyber attacks will become less important. But I'll let Dimitri cover that, and I'm going to look at some questions here. I just got a message because I'm doing over my phone. 80% of my monthly usage for data is gone, so I'm going to get to these questions. I might go offline. I don't know.
Now, with cyber attacks, you shouldn't be too afraid. Certainly with the big coins like Bitcoin, Litecoin, Ethereum. By reason, well, everything is expressed in hash rates, which is the amount of calculating power present on the blockchain. Now, with new coins in full development, cyber attacks might hold a certain risk. Why? The accumulated hashing power or calculating power present on the blockchain isn't as high. Someone with too much time and too much money might take over that blockchain. Now, is it an intelligent move? Not really, because you will probably be putting in more money than you will get out. Also, there's an active community behind it, and they might notice, because blockchain is a public ledger and distributed, they might say, well, we can exactly pinpoint in time when the attack took place. So we're going as a community invalidate that part of the block, and we'll make a hard fork. Now they say you need 51%, well, of the total hashing power present. That's true, but the remaining 49, the minority might say, nah, we continue starting from that block. And if it's the official community and the official developers, they might overrule that 51% and say, no, we're going to continue because we saw at that point here there was an attack and someone tried to take over. So fuck them. We deviate from it. And that brings in a certain amount of security. Now, as soon as a lot of hashing power is present, a lot of miners present, hashing power has become as high that actually a 51% attack, like they call it, is virtually impossible to execute. And should it be executed, well, the losses would be tremendous. Simply on investment alone for the miners, it would be insane. For example, if you would do it for Ethereum, you already need to lay down a few millions of dollars in order to make a hard, fork at that point. So yeah.
Ethereum Classic was a good example. Ethereum Classic, as a new coin, as a relatively new coin, didn't have a lot of like miners on their blockchain. And so what happened was apparently entire mining farms using NiceHash did a lot of what they called offline mining and transactions. And then they just basically like crashed the coin by like it was basically like it's like a cyber attack on the coin. And so recently, Ethereum Classic, they did what was called the Thanos update, and they implemented the 51% and 3 times hashing power or network power in order to, submit offline hashing to verify coins. Because imagine if you have a crypto miner and you can verify transactions, you can get the block rewards without actually having done any of that work, or doing it at a lower rate than what the rest of the network is doing. And so Ethereum Classic, in order to shore up security, they lowered their DAG. The DAG file is basically like the file that they upload to the processor to decrypt in mining and
the consensus protocol.
Yes, thank you. And so what they did is they lowered their DAG file, which brought on a lot of the older, what they call Polaris mining cards that had like 2 GB memory cards. And so now the hashing power has shot through the roof. So now it's like since now this Thanos update, they need 3 times the current network hashing power in order to confirm offline transactions. This is how they basically cyber attack Ethereum Classic. And so now that the hashing power is through the roof because they have like all these old cards online, it's just not worth it. It's literally not worth it because, like you said, the power and the time and the energy, what you're going to spend on electricity to get 3 times the approvals or 3 times the confirmations, you might as well just mine outright, and you'll make more money, because you're going to spend money to actually try and crash the coin. Then that's going to be a hostile attack, and people are just doing these attacks for money. So yeah.
On that note, I would also like to make the remark. A lot of people are actually talking about high value coins, etc. But me, on the other hand, I always say, Bitcoin is high value. Okay, it has a high hash rate, but so does other coins. But do not or never pinpoint on value alone. Always take a look at the technical details. And actually, hash rate is one of the most important details you can have, and for an investor. Why? The higher the hash rate, the more secure the coin, the more stable it becomes. Not in price volatility, but the more stable it becomes in execution and use. And that's one of the tips I want to give to traders and investors. Look up the hash rate. If you see the hash rate is relatively low, it has high value, do not invest. By reason, a 51% attack can easily be executed, or other, technical problems can occur and you might lose, a vast amount of money, period.
Indeed. I'm going to jump straight to some questions because, like I said, I don't know how my data is looking. We had some questions. Let me look these up real quick here. Let me get on Telegram. We have a question here that says, what are the best altcoins for long-term gains other than Ethereum?
Yeah, Bitcoin is going to be one, naturally. Now, that's one, that's actually a question along the lines of which altcoin is going to, give more money than Bitcoin at the current rate. And I'm going to say there isn't really a good answer to it, no specific coin that I can point out. By reason, all coins at the moment, due to the Bitcoin run, are experiencing, an upward tick in value. The reason thereof, vary a bit. It might be popularity, adaptation, naturally use, and the quantity that is being transferred, which give value to the coin. Now, all coins are experiencing an uptick, but not only because of higher adaptation, but because of another mechanic, which is outside the influence of cryptocurrencies. Mainly the money with which you buy it is actually becoming more and more worthless. If someone would scroll down my Twitter stream, they will notice somewhere in the last week or so that I retweeted an article where it said, the value of the dollar and the euro is at an all-time low, which explains why many cryptocurrencies in value are actually exploding in value. It's not that they are, there is naturally a heightened adaptation going on, yes, but that only explains a part of the rise in value. The other part is, your euros and dollars are becoming more and more worthless.
I saw a chart on Twitter, and I wanted to retweet it, and I did it. But it basically showed. Let me get my finger in the screen. On a chart, on a graph chart, the price of the dollar and how it's dropping, and on the bottom side, it had a perfect V, almost like this, and the price of Bitcoin and how it's rising in conjunction with the date of the U.S. dollar. So there's a direct correlation between the dropping value of the dollar, and then there was an increasing value of the of Bitcoin. So yeah, that's a factor. In terms of altcoins, some of the most popular altcoins that are seeing a lot of progression: Chainlink, Litecoin,
definitely,
XMR. These are like the primary altcoins. There's a lot of altcoins out there. There's 7,000+, if not more. So like you said, there's a lot of factors to look at when you're looking at these coins. But those are the primary altcoins: Chainlink,
that's correct,
Litecoin, and XMR.
Yeah, and that's a more general kind of coins or tokens. Keep an eye on all coins and tokens which are related towards decentralized finance. So Yearn Finance is one very big one. Chainlink naturally is also related to DeFi, so that one is also in an uptick. I believe Bancor was also related towards DeFi, and there was another one I reviewed, but can't immediately remember the name. So yeah, everything related to DeFi, keep a close eye on it, because I'm very sure, especially with Ethereum 2.0 rolling out, those are going to make waves on the market, quite big ones.
Yeah, I have another question here. It says, can you recover lost cryptocurrency, or best ways to store crypto?
Yeah, it can be possible under certain circumstances. If you lost your coin, if you actually lost your wallet where the coins were stored, you can actually restore the wallet even if you lost your hardware wallet. The only thing you need is your 12-word or 24-word private key. In that case, you need to type it into your new hardware wallet, or even a desktop wallet, and your coins are recuperated. Why? Well, you're actually telling the entire blockchain, well, this is now this node because I gave the security code. That's it. Now, if you've lost your coins during a transaction, impossible to recover. Sorry. In that case, and that's a question I received multiple times, I say, sorry, bad luck. Next time, watch out with scammers.
Yeah. My advice, I always tell guys, buy a cold wallet. I have a Trezor, I have two Nanos. I have a Nano Ledger S and a Nano Ledger X. And simply because of this restoring using your words, it's like 12 to 24 words, depending on which one you use, you can restore your wallet. If you could just order a new wallet and then restore it. I can literally like use my Nano Ledger S to restore the lost Nano Ledger X and vice versa. And my Trezor is the same way. If I lose my Trezor, I can just get a new Trezor, or if it gets damaged or whatever else, or I lose it, then I can just, buy a new Trezor and I can do it. If you lose a paper wallet, like, back in the days when Bitcoin first came out, you had actual paper wallet. If you lose it, it's gone. It's gone. It's gone, guys. So don't screw around with goofy stuff. Get some technology back, information. Dimitri actually has a method of like making one from an actual USB stick. Then another way to lose your cryptocurrency is sending Ethereum to a Bitcoin wallet or Bitcoin to an Ethereum wallet. If you make that mistake, Ethereum is more forgiving if you're trading between Ethereum and Ethereum Classic. And I've actually seen online there's a way to restore Ethereum and Ethereum Classic. If you send Ethereum to an Ethereum Classic wallet or vice versa, there is a way to get your money back. But if you do Bitcoin or to Ethereum or Ethereum to a Bitcoin wallet, guys.
Yeah, cross-blockchain exchanges implies you will be losing your money. Well, what you said, Ethereum towards Ethereum Classic and vice versa, the same kind of applies between Bitcoin and Bitcoin Cash. Why? Yeah. Both make use of approximately the same blockchain. So in a certain sense, you can look up from which block it is, and it can be restored, but it's quite a hassle. So just make sure you're working with the same currency. Don't screw up. Watch out.
Indeed.
Or
I think that's all the questions we have here.
Or I want to add with the DeFi service, DeFi making its uptick, there are a lot of projects which develop cross-blockchain transactions by making use of an intermediary coin. If you do not trust yourself on technical details, try going through that. In that case, it's much more forgiving because you will be making use of the intermediary coin and not so much with Bitcoin itself. It's a small tip, but it's a bit safer.
Yeah, and guys, these cold wallets, they're just not Bitcoin wallets. Like my cold wallet, they hold Ethereum Classic, they hold Bitcoin, they hold Litecoin. You can just download, like it's basically like a device. You can download the wallet app, and it can store those different blockchain coins, just as easily as it can Bitcoin. Okay, we have like financial advice question here. I loathe financial advice.
Looking to invest 10K, would I be better off?
Okay, so as a relatively new to crypto, looking to invest 10,000, would I be better off, in your opinion, at this stage of things, putting all into BTC or Ethereum exclusively, or splitting 5K in each?
Never bet on one horse. Distribute.
Yeah.
That's a golden rule when investing or trading. Always bet on different horses. Just make sure you are aware of the limitations and that you know, well, in this case, the coins. So Ethereum and Bitcoin, make sure you have a decent knowledge of it. I wouldn't only limit myself to Bitcoin and Ethereum. One of the advices I also give in my proper course that I developed is, well, do not limit yourself towards the volatile cryptocurrencies like Bitcoin and Ethereum. Invest in stable coins which are backed with precious metals like DGX gold, etc. Why? They are stable coins being backed by, well, a physical entity, I'm going to say. Because money is losing its worth, well, the second best investment you can make is in gold. If you combine cryptocurrency with gold, you've got literal digital gold. stablecoins like DGX Gold, which are backed by the precious metals, are actually very good protectors of wealth. Why? Their value remains level. Bitcoin and Ethereum, well, they fluctuate quite a bit. It might be the case you invest on a very bad moment that you invest on an all-time high, especially now it's going to be the case, but that from between now and within 3 days, for example, that the value of the coin might have decreased with 10% or something, which is very realistic, I'm going to say. So if you invested 10k, well, suddenly you will only have 9k in value left. Now, I'm certain on the long term it will come back, but I prefer to have my funds to be more stable, that I always have a decent overview. Not that they suddenly decrease in value, preferably level or in uptick constantly. So that's one of the advices I'm going to give. Do not invest only in Bitcoin and Ethereum. Your move is very good, but look at other stable coins like DGX Gold. And I'm going to immediately say, do not invest in Tether. Simply don't, because its value is attached to the US dollar. And as said before, the US dollar is at its lowest value since ever. So that implies that the value of Tether is actually very, very low at the moment.
Yeah. Hey, can you talk about some of your crypto products? I'm going to check my data. I might accidentally go offline when I change apps because I don't do this from the phone much, so I don't know what's going to happen when I change apps. But
Yeah,
talk
sure.
about some of your products, and then we'll wrap this up, while I do this.
Yeah, sure. I myself developed a few courses. One is the Ultimate Guide to Cryptocurrency. Can be found on my website and Gumroad. In it, I actually talk about cryptocurrencies, all the very basics to trading, investing, but also the technology that powers the different coins. So the blockchain technology. I put everything down in very plain English terms, by reason I know most of the crypto community are a bunch of tech nerds, and I took my time to actually make translations and make it, well, very clear. So yeah, that's the Ultimate Guide to Cryptocurrency, wherein I talk about decentralized finance, which is also a standalone course. I talk about mining, the different kind of miners which exist, the different strategies to mining, so solo mining, cloud mining, and a mining pool. And then I've got my 3 other books which also pertain to the Ultimate Guide to Cryptocurrency, which are, well, actually the basics, wherein I lay down, well, all most frequently used words. I explain different kind of wallets, their advantages, disadvantages. I've got a book within that course called CryptoFac. That's actually nothing more than frequently asked questions upon which I give the answer, a bit like I've done here in the live stream. It's quite extensive. I believe it was 30 or 40 pages, that book. And there was a third book, and it's bad because I've written it, but I can't remember the title nor its content, but I know. That's bad from me, but I've been up very early, so yeah. No, no, it's also, yeah, it's the more advanced lessons. That was it, wherein I more elaborate, my apologies, about blockchain, etc., and get into more specific details, slightly more technical, but with the first books in mind, well, it actually makes a very clear overview. So yeah.
Yahya 1125, he's asking, what is the name of the coin attached to gold? I don't think there's any gold attached to coin at this point. Is there?
There is DGX Gold, it's called. There are actually a variety of coins.
Was it DGX?
Yeah, DEGEX Gold.
DEGX Gold.
There are actually quite a few other coins in full development. Also, Tether Gold is now a thing, but like the classic Tether, I'm going to say, not going to say it out loud, but you can see my head movements. There are other ones. I've made usually my info series back on my own private website. You can easily look up to Pax Gold. That's also another one, right?
Okay, I actually didn't know this existed. I really didn't. This is surprising to me.
Yeah, I not all my coins that I've shared on my profile on my Coinbase account are represented on my website. I've got
Okay.
I've got a few wallets, I'm going to say, for specific coins that I've used and that I
Yeah.
invested in, that I silently keep for myself, that not too many others
Yeah.
know
I have
about.
a few coins that I mine and I don't talk about at all. I have I actually have a wallet that is actually a node at the same time on my laptop. And so it updates the node. My node updates every time I open my wallet. It takes a little bit of time, but I do it. If anybody doesn't understand what a node is, nodes can be run several ways, but the most common way to run a node is over Raspberry Pi, apparently. And what happens is you can have a partial node or a full node. A full node, since it's easier to explain, it just takes a copy of the entire blockchain ledger and you store it there. You don't get money for it, you don't get paid for it, but basically what it does is it adds to the security of the network by making another chain of verification. So basically it's just another node where all of the information of all the movements on the blockchain are stored, and it's just another point that's used for verification to make sure no dodgy transactions pop up. And so yeah, I run a
Yeah,
node also.
generally, if you're a miner for cryptocurrency, you generally, well, by rule, are a node.
Yeah,
Why?
indeed.
If you start
Yeah,
mining, you download the entire blockchain.
yeah,
So if guys want to start mining Ethereum or Bitcoin, don't be surprised that the setting up might take several days. Why? The blockchain is several gigabytes big, which need to be downloaded, so it will take
yeah.
some time. So yeah. Also, investors tip, because me and Craig here also mentioned it. We own multiple wallets for a reason.
Mhm.
Um, as an investor or trader, I suggest you guys do the same. Have multiple private wallets. Store the keys very well. Centralize it somewhere on your computer, but make sure you have a backup. Why? If one wallet gets compromised, you still have the other ones as a backup.
Yep.
So yeah, and also not all wallets accept all coins.
No,
Like
that's
I
true.
said, you need to diversify your portfolio, your assets, so you will be needing multiple wallets. Make sure you have a system, somewhere a logbook or something, invest in the different coins, have the proper wallet stored for them. That's it.
Yep. Indeed, absolutely. Guys, we're up on 52 minutes, but I'm going to call this. If you guys don't have any more questions or whatnot, we're going to be back every week. So basically, it's like if you have questions, you can stack them up, stock them up, and we'll be back here on a Sunday. But I need to get off this phone. My data is like going like crazy. I actually got my fast connection. The router arrived. I got the pictures, the photos, because I'm not at home right now. So, and I can't wait to get back down there tomorrow and like get everything set up and just be ready with my super high speed internet. So it's like, and just to talk about this while we're talking crypto, one of the biggest problems I have as a miner is like my house, it only has 16 megabytes transfer. I mean, imagine that, 16 megabytes, dude. I'm on dial up. It's horrible. And so basically, it's like you said, every time now there's a file, it's called the DAG file. The DAG file is basically all the new transactions on the blockchain, everything, all that information is coming down into my GPUs. And then we're doing new transactions and mining out new transactions, verifying, and decrypting new transactions. All of that's happening over my 16 megabyte connection. And I've got like multiple miners. I've got more miners than I show on camera because I believe I'm a Muslim, so I believe, evil eye is real. So imagine how much work is going back and forth on my network. And then I'm trying to live stream, you know? It's mad. It's mad. But I got 400 megabytes now, man. I got 400 megabyte,
Yeah.
up and down. So,
Luckily, I have a better internet connection. It's only my camera and my microphone, which are shit.
yeah.
So I need to invest in it for future use, for the future broadcasts.
Yeah, I also got like a better router also. It was kind of expensive. It's by ASUS, and basically it gives priority to like my main. Basically, I got a gaming router, and I put my connection into the gaming router is what I'm gonna do, and then the rest goes over to regular. So I get priority, and my streams get priority over all over the signals.
Yeah,
But what happens?
that's a wise choice.
But what happens to me with a slow connection is I get what's called stale shares. So what a stale share is now I'm in a pool. That means there might be like 3,000 other miners in that pool with us, and we act as a unified computer system, breaking down the blocks super fast. So what happens is a stale share is when my work that I get, because the block is broken down into pieces and give to different people in the pool, my system gets part of that work, and the pool has moved on to a new block, but I'm still working on the old block. That's because my connection is slow. And so it becomes what's called a stale share. And stale shares, I only get half of the stale shares. I don't get the full amount. So it's like, it hurts. You know, it's a loss of money. I get 50% of what that actually is worth. And then the pool itself gets the rest. So, yeah. Oh, I wanted to talk to Yahya1125 had a question. Now, guys, when you do like transactions, if you send or receive money, well, basically this only applies when you send money. If you when you're ready to send money, it's going to ask you if you want to pay extra. This is what we call gas fees. Now, whenever you transfer money over the blockchain, over a proof of work blockchain, what happens is you have to pay a transaction fee. That transaction fee is actually paid to the miners. If you pay more, this is what's called a gas fee. And what it does, it just prioritizes your transaction so it's done faster, because thousands of transactions are happening and you got to wait in line, basically. And if you pay more, you go to the top of the line. So that's what gas fees are. So if you want to pay extra, boom, you can pay extra. The miners, guys like me, we get that money. We get that extra fees. It's split up between us.
Yeah, as a extra detail there, I've received a lot of questions of people who said, yeah, but I'm still waiting for my transaction to confirm. It's still pending. And I ask True and I say, well, was it towards the right address? Is it Bitcoin towards Bitcoin? Yeah. And then now my natural first question is, how much did you put in for transaction fee? And there are a lot of people who say, well, Bitcoin is distributed, it's decentralized, so I put in nil. Yeah, in that case, you might wait for several months. Why? The miners will always take up the transactions with the highest transaction fee. Why? Yep. Because they get paid. If you're saying, yeah, well, zero transaction fee, well, that implies you do not want to sustain the network, and the miners will practically say automated, well, go fuck yourself. Literally.
Yeah, exactly. Yeah, quite literally.
So don't be a cheapskate. Simply type in transaction fee. There are enough websites which will indicate you what a decent transaction fee is. It isn't as much. It's but a few. Well, I believe 20 or 30 Satoshi at max, which is few cents maybe for a transaction. Yeah. If you're transacting 1,000 euros, I believe 20 cents. Peanuts.
Sure. Yeah, just do it.
Like they say in Dutch here, it's pee-pee money.
Yeah, indeed. I mean, I made a mistake. I transferred Ethereum Classic, and I just took the basic, transaction fee. And for that, I have to wait for 91,000 confirmations on basic transaction fees. I mean, it's been like 8 days, and last time I checked, after 8 days, was at 67,000, confirmations. Dude, you don't want to wait that long for your money.
No, but if you really want to go cheap, you might get into more technical detail and simply look at the hash rate present on the blockchain. By reason, the lower the hash rate, the more likely will lower value transaction fees are being accepted and put into the blockchain. Why there are less miners, there's less infighting between the miners, so in that case you have more chances that your transaction puts through. Now the effort you will be putting into it isn't really worth it. Just pay the transaction fee decently.
Yeah.
Go ahead.
Just so you guys know. All right, guys. Hey, thanks for tuning in. We're up here on 1 hour at the tops. It is great being here. Dimitri, how can they find you? Everybody knows how to find me. How can they find you?
Well, they can reach out to me through Twitter at with my Twitter handle at Dimiha, or through my website. Well, the name is put underneath, but simply write everything together.com and you're on my website, which has links towards my Instagram, my LinkedIn, towards my Facebook page, and towards Twitter. So yeah, you can easily reach out to me.
I'm actually looking for your handle right now, so I could put it in the chat. There it is. Hold on 1 second. How do I share this here? Share. Oh my gosh, it's like gotta be all complicated now. Oh, here, I'll just copy it. I can just copy and paste, can't I? Oh my gosh. Here, you know what? Yeah, let me type it out.
Perhaps for the next session, I'm simply going to use my handle as the description.
Yeah, that'd probably be easy. But I got it now. So here it is at Dimi. Oh, there it is right there. Boom. Right there. Let me put this up on the screen as soon as it pops up on my dashboard here, because I'm using my other phone for the live chat.
Yeah, guys, you can always reach out to Twitter if you have questions. Most of the time, I will answer them. If there are decent questions for next topic or so, we'll discuss it here with AbuAmerican to include it in the next podcast. So no problem at all. I, on a daily basis, tweet questions I receive through the platform Quora with my answers. If you simply browse through my timeline, you might find the answer, or in any other case, send me a private message. I might answer quite quickly. So yeah.
Yeah. All right, guys. So tune in next week. We're going to talk about like hard wallets and what some of the technology out there is, paper wallets, what you should use, what you shouldn't use, and boom, tune in. All right, this is your man AbuAmerican, Dimitri. We are
Until
out.
next time.